Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, the World Bank is now calling for the global economy to grow by the most in almost half a century at 5.6%. This economic growth and recovery is happening primarily in wealthy countries, though, so it seems this will make inequality worse. Tell us about that and what's driving this extraordinary growth.
World Bank expects that global economy will grow by 5.6% this year, and it is a very strong growth considering the lower base effect from last year's shrink from pandemic. Actually, it is the highest growth rate in almost 5 decades. Major factors behind this rapid growth are expansion of vaccine supply and aggressive fiscal stimulus in advanced economies. However, World Bank says that there will be a huge gap in economic recovery speed between high-income countries and not. All rich countries that have enough resources to provide vaccines and fiscal stimulus will recover the level of before the pandemic. But the low-income countries, only a third of them will recover to the level before the pandemic.
So a high correlation there, rather, between the ability to procure vaccines and economic growth. Well, let's turn to the markets. Stocks in New York closed overnight lower as investors watched inflation. Also, new meme stocks surging, which some investors are alarmed by. The S&P down almost 0.2%. The Nasdaq down about 0.1%. What's the story in the global markets?
U.S. market closed lower yesterday. Dow Jones had a negative 0.4% return, and Nasdaq also shrank by 0.1%. Actually, U.S. markets were quite slow with less trading volume yesterday. Investors are balancing their confidence in the economic reopening against the risk of higher inflation and higher tax. Such worries have contributed to a cautious view of the outlook for stocks in the future. European markets were mixed as investors wait and see developments of economic recovery in the region. So the markets were moved ups and downs between negative 0.4% return of Frankfurt and 0.2% return of Paris.
And in the Korean market, options were expiring today. That usually is a significant event. And although the market lacked direction on opening, it did post a solid gain, especially tech shares on the Nasdaq. Tell us about the local market.
Domestic market has declined over 2 straight trading days until yesterday. But today, the market had decent gains. Today's so-called 2 witches day where, as you said, future option contracts matures at the same time, and it comes generally with more volatility. Kospi had 0.3% and Kosdaq had 0.9% return today. Particularly foreign investors became a market driver in both of Kospi and Kosdaq markets with aggressive purchase. But thanks to U.S. price level release tonight, the market rise in domestic market was limited.
Well, zooming out a bit here for a minute, the price of raw materials and commodities has risen so much lately, but with so many factors at work, some analysts say it's hard to tell whether or not we are or are not at the start of a new super cycle. In any case, it's said that if material prices globally go up 10%, then Korea's consumer prices will go up by 2%. What do you see happening in terms of a super cycle?
From the beginning of this year, commodity prices are surging, and most of them recovered the level before pandemic. Particularly, international oil price increased by over 200% in April. It is a huge increase, even though the price growth is exaggerated due to lower base effect of last year. Therefore, quite a few economists expect that there will be a super cycle in all commodity markets. But according to Bank of Korea's recent report on international commodity market, even though the market rebounds from its lowest point, it is driven by many mixed factors like economic recovery, supply disruption, and so on. So it is too early to say that global economy is entering the super cycle of commodity market.
Right. In terms of exports, so far this year, Korea's have been remarkably strong. According to a survey of analysts by the Federation of Korean Industries, they think this good run could come to an end, though, in the second half of this year for certain areas like computers, petrochemicals, displays, and a few other sectors. Professor, tell us about that survey and what do you make of it and the export situation?
Export is the strongest factor that helps to recover Korean economy from last year. All major export items like memory chips and automobiles are growing every month in 2 digits compared to the last year's. According to the survey of analysts in security companies, export of memory chips and automobiles will continue to grow until the end of next year. However, exports of computers, petrochemicals, display, home electronics, and biohealth will be tame by the end of this year as global demands decline. So that means that to maintain the momentum of economic recovery, there should be rebounds of domestic consumption and investment before exports cools down.
Yeah, semiconductors have been extraordinarily strong. I'll have to see if we do see that rebound or not domestically. Professor, we'll have to leave it there for today. Thanks so much for sharing your insights with us. We always appreciate it.
Thank you very much.